Hey guys, welcome back to the channel. Today I'm going to be providing a market analysis update on XDC and going over some very important levels of support and resistance that you should be watching out for. So if you're new to the channel and you want to show some support, please leave a like and subscribe. So first, I want to direct your attention to this resistance area ranging from 4 to 4.3 cents. So we can see how if we go all the way back to 2021, this was very key resistance. We had a pretty sharp rejection off this level, and in just the following 3 weeks, we dropped around 40% after rejecting off this very key level. So we came back up and then we retested it and held it as support. So basically what we did was we flipped it from resistance in March into support in May. And following this support retest, we went on to new all-time highs. So it was a very bullish sign. And we came back down a little bit later on in February of 2022. We had a pretty nice bounce off of it. Once again, holding it as support, we bounced approximately 53% off this retest, and then we came below it. So right now, we're pretty far below it. If we take a measured move, we're approximately 40% below this level. So if in the event that we're starting to move back up and retest this, it's going to be a very, very important retest. Are we going to reject off this and form macro resistance, or can we reclaim it and start holding it as support? So I'm going to illustrate what each of those would look like, because it's going to be probably the most important thing for XDC on the long-term time frame. So if we start to make our way back up like this and we have a brief candle sort of coming back down and doing something like this, that would be a very bearish sign. It would flip this macro area into resistance, and it would lead me to believe that we've got a lot lower to go before finding a bottom. And it would also correspond to another rejection off these moving averages. They will be continuously moving down. And if we just sort of draw out the general trajectory, we can see how that would correspond to a rejection off not only this resistance area at 4.3 cents, but also these moving averages, which are going to be declining. But that is the bearish case. If we are starting to move back above it and holding it as support, that would be a very positive sign. And that would kind of be the sign I'm looking for to get long-term bullish, because that would not only reclaim this area at 4 cents as support, but it would also reclaim these moving averages. And if we go back here in just a second, we can see how historically they've been very key levels of support and resistance. So we can see this very important rejection in May of 2022. And basically, following this rejection, we had an immediate capitulation down lower. So I'm going to change the color here to yellow just to have a little bit difference in the circles. So we also have this rejection here in January. So following this rejection, we dropped pretty significantly as well. Just the following 7 weeks, we dropped 60%. But when we're above it, we can hold it as support. So that's a very bullish sign when we're above it and we're holding it as support. We can see some bounces in the event of any short-term corrections. So clearly what we want to be doing is claiming these moving averages, getting back above them, holding them as support. Because if we can do that, we can start forming this uptrend. And in general, that means that we could start to basically take out this declining structure, right? We have a general downtrend in play where the lower highs are basically just forming off of this trend line each every few months, where we have yet another rejection just coming back, forming lower lows. So it's a pretty consistent trend. We want to see that trend broken. We want to see a reclaim of this support level at 4 cents, a reclaim of these moving averages, and a general break of this downward sloping resistance. And if we can do all those, then it's going to be a very, very good sign for XDC, and I'm going to start becoming a lot more bullish. However, if we're starting to reject, if we have a rejection off of all these resistance areas and we're starting to come back down, then really I'm going to be starting to target some of these lower levels. I'm going to outline them here in just a second so you guys can look out for some potential targets if we see this happen. So we have this all-time high in 2018. Basically, this was the macro level before going into this bear market bottom. This is going to be a very important level, but it is not that far down. From current price action, we're only about a 23%, 24% drop from going back to that level. So if we do enter that range, then it's probably going to be short-lived. I think either we have a sharp bounce off of it or we just capitulate lower to some of these other targets. And the other targets are this level here I'm looking at in August of 2020. This was the high, and it kind of formed this dual resistance. It had this double top for a brief period of months, and then we came back down, we consolidated, gathered ourselves, and then quickly reclaim this level and went on to new all-time highs. So this level here at 0.009, I'm also watching this level in the event that the all-time high from 2018 is to be lost. So that's the end of my XDC analysis. I hope you guys did enjoy, and as always, I will see you guys in the next one.